Welcome to our daily Bitcoin update, where we share our market perspectives and strategies. Please note, our content is not investment advice or educational. It is intended for entertainment purposes only. We are a small team of investment professionals with decades of combined experience in traditional finance. Our careers span roles as traders, market makers, and portfolio managers at top-tier banking and money management institutions. We use a proprietary methodology that combines qualitative and quantitative factors drawn from traditional finance, technical analysis, liquidity, volatility, market making, and trading algorithm concepts. If you suffer from analysis paralysis and prefer short-format market perspectives with rationale for trade setups from our proprietary methodology, stay tuned and enjoy. Bitcoin traded in a tight 61.5K-62.5K range over the weekend sessions, finishing apex, in line with the Friday BTC CME futures close. Indications of absorption over the weekend were confirmed by an open drive upon the weekly open to the 64K area, only to retrace back to unchanged on the day in the London session. Liquidity has thus been tapped above the weekend range, and lack of follow-through increases probability for continuation lower to tap liquidity below the weekend range in the coming sessions. Zooming out, the retrace higher from the prior low of 60K is showing signs of exhaustion, and multiple technical confluences and supply liquidity zones are creating a headwind to continuation higher. Market structure is bullish over medium and long-time intervals, although price action has been corrective and consolidating, perpetuated by neutral market sentiment and lack of a market catalyst to provide directional conviction for an impulsive departure out of the 50-70K corrective range. The risk backdrop is one of caution and is keeping the market tentative due to heightened geopolitical risks, recessionary fears in the US, and rapidly approaching US presidential elections. Bitcoin ETF flows have consequentially been mixed recent weeks, although there were significant net positive inflows on Friday. Also positive is probability of Trump presidential victory increasing to a near 3% lead in betting markets. Looking ahead, in focus this week will be US inflation data on Thursday, which could potentially have strong implications on expectations of Fed monetary policy and correspondingly market risk appetite. This, in the context of already uncertain and cautious market backdrop, will be supportive to volatility as the week progresses. The Bitcoin volatility surface is more or less unchanged over the weekend. The term structure remains steep and the call-put skew flat, indicating expectations of persistent near-term corrective price action, low directional bias, and heightened risk around the elections going into year-end. Recent demand for December calls around 100K strikes confirm year-end expectations of parabolic price action have yet to wane. In terms of strategy, we maintain a tactical neutral directional bias going into the week, particularly given uncertainty and expected volatility going into the Thursday US CPI data release. We are remaining patient for higher probability, high-risk reward setups as market structure remains bullish over longer time intervals. Our directional bias is to higher prices, thus we prefer to implement long setups as opposed to tactical shorts. Our long setup scenarios, we are monitoring reaction in the event of retrace to adjacent demand point of interests and technical confluence zones at 61.5K, 59.5K, and 57.5K. In the interim, we are also poised to exploit opportunities to sell volatility via options if volatility rises in the coming sessions as expected. As always, do your own research and analysis. Be safe and good luck in trading.